Well, today we have to talk about cash. Money sitting on the sideline, not being invested. A hell of a lot of money. Why is this so? I mean, in the last 12 to 18 months, we saw a huge sell-off on the bond market in the United States. This is why the yields went crazy. And all this money didn't went into the stock market or into gold or in other assets. Most of this money went into new treasuries because of higher interest rates. And but still there's a lot of money sitting on the sideline. People don't know what to do with the money. And why do I talk about this? Because it's absolutely possible that we see in November is over, but December and January, that a huge money inflow will take place. Why is this so? Because the institutional investment companies, the pension funds and the banks and the big hedge funds, they have to invest because they see at the end of the year, by starting 24, a huge money inflow from the public, and they have to do something with this money. Plus, they sit on a high cash quote. So there is something like a cash mania taking place. I would say 2023 was predominantly dictated by cash mania. People were scared, they didn't know what to do. Plus, we had the war in Ukraine and now in Israel. So a lot came together. But all this money will come back. And why do I talk about this? Because when this money comes back, it will be really absolutely amazing what you will see on the stock market, on the gold, I would say as well, and on the Bitcoin. So another thing we have to talk about today is what's going on in the mining industry. This is a topic we will look in detail because, as you know, we have a miner index developed for quite a long time. And there is a very important indicator in the moment we have to talk about. So stay up until the end. Make sure that you get all this information. If you like the content, subscribe the channel. Give us a thumb up if you like this, very much so. Okay, so I think it's about time to check the overall market. S&P 500, well, it's boring in the moment. We had Thanksgiving last Thursday, and Friday was not much taking place yesterday. It's boring on a high level. Let's put it this year. Let's check the US yields. Well, 4.9 on a 2-year, 4.4 on a 10. Still not healthy at all. Why? When I invest my money, I should get on the long run more interest rate, which doesn't take place in the moment. And we look quickly to the Far East last night, also boring. Historically low levels in Shanghai and in Japan. Well, Japan was quite okay, but also Hong Kong. Another thing is gold. You know, usually we had this vice versa relationship between gold and dollar. It's not in operation anymore. So this is very much related still to the uncertainty. People sit on money, they're scared about what's going to happen, and they don't know what to do. On the other hand side, when we look at the fear and greed index, we are on 65% now in the greed zone. So in a way, the greed is coming back. And important is to check the market momentum, which is more or less the S&P 500 on the timeline. And what you can see is that we are really far above the 125 days moving average, which is a very healthy sign. And for this point, we have to check what are the retail investors doing. 4 weeks in a row, we see that the bullish segment, the green one, is increasing, actually doubled from 24 to 45. Yet at the same time, the bearish red one from 50 went down to 34. So this is very important. The sentiment is very positive by the end of the year, which could lead into a, well, year-end rally, something sort of like. And here we come to what I just talked about, with money sitting on the sideline, which is basically the institutional investors. And here we have two graphs which reflects the reality in the moment. It's the NAA IM exposure index. The blue line, what you see here is the percentage of investment of institutional investment companies, and it's close to 80%. And it came from, I don't know, something like 30%. It goes very much with the S&P 500. So people invest in the stock market, the companies invest, the investment companies invest. And this is what I just said. We will see in the next 8 weeks a huge money inflow into the stock market and into the overall market. And here we come to a Bitcoin. Well, we are sitting, as you know, around about on $37,000. I opened up this on a weekly base, and 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6 weeks in a row, the green candles closed green. So we have a stable uptrend, and this looks really, really nice. We check market capitalization, gold on one with 13 trillion, followed by Apple, Microsoft, Saudi Aramco, Alphabet, and Amazon. Silver is on 7, and Bitcoin is on 12, very stable, just after Tesla, with $728 billion. So it's a really established asset and on the way to, looks like, at least to 1 trillion. We quickly check the halving clock, and 140 days we have to wait. It's going to take place April 17. Why is this important? I just want to repeat it. It's important for the miners because the reward for the validation of a block will be cut by 50% from 6.25 Bitcoin to 3.125. And so the competition will go up. And it's usually because it's a supply shock, more or less, because instead of 900 Bitcoin, 450 Bitcoin come on the market every day. And this is usually a strong starting point for the next bull run. And here we come to the mining industry. Crypto miner Hive expands data center operations in Sweden. Now, Hive is a European company, and their target is, and they actually do it, to produce Bitcoins just based on renewable energy, which is wind or water, hydrogen or sun. And Sweden is developing to a very strong Bitcoin country because we have a lot of hydrogen energy produced from the water, and very often they have a lot of excess energy. They don't know what to do with it. And so for the miners, this is great because they can buy this electricity to very low rates and turn it into Bitcoin. They make a lot of profit. And it's a very, very interesting thing. And it's not only Hive. Hive is, by the way, on the stock market. You can buy the shares from that. But all the big mining companies in the world are located in Sweden or in the northern part of Europe, because it's a great location for them to mine Bitcoin. Yeah, this is another thing about Bitcoin. There's a lot of shit talk. Well, Bitcoin is bad for the environment, and it's used in any sort of criminal action, although the dollar is the predominant currency being used. But it's because of the big reserve banks. They don't like the Bitcoin because, I mean, they don't like gold, by the way, as well, because they just like the fiat money because they can make debts and debts and debts. As we can see in these days, it's getting up and up and up. And a store of value like gold or a Bitcoin, this is not really what we like. So this is why they talk a lot of shit about it. But Bitcoin is actually, in fact, not at all bad for the environment. Around about 65% of the energy being used today is renewable energy. And the percentage from the other side is going down and down. And there's a simple reason why, because the mining is only profitable if you have cheap energy. And the minute you have renewable energy and it's just next door to you, it's virtually free of anything, free of cost at all. So, and the industry realized this. So there's a strong force pushing them forward to this direction. So I would say now we come, like you always know, to our data. We know from a lot of emails we get from you guys that this is one of the reasons you look this channel or you watch this channel, because I think we have probably the most interesting database around. And here we start. First of all, let's talk about the spot ETF approval timeline. Nothing has changed. Every day it can happen, but deadline is still January 10 with the ARC application. And, well, no rumors, every day a little bit. What is very important, we saw the legal settlement between U.S. Justice Department and Binance. We have to pay $4 billion, which is not a lot of money for them. But I think BlackRock was behind this. They said, listen, you guys, before you do an approval for all these ETFs, sort of a problem with Binance. And they did. I mean, they have to pay a lot of money, but the problem has been sorted out. And another thing is that Coinbase is now going to be the #1 player in the United States. And who are the shareholders? It's BlackRock, it's Vanguard, it's all these big guys. Like they are major shareholders in the mining industry as well. So they will earn on the mining side, they will earn on the trading side, and obviously they come with an ETF and they earn as well. So we have like 3 pillars to make a lot of money. This is something which only can take place in the United States, obviously not in Europe. Anyway, but bear in mind, you can be part of it. The best thing is always follow the big guys, because usually they do things right because they have a lot of people working there. They know what they do. This is what it is. This is go with the stream and you will be successful. That's what it is. Anyway, Fear and Greed Index is on 68. Our just Bitcoin related 68 as well. Quite funny today. And well, the heat map is red. There's a simple reason today why it's red. Well, Bitcoin went really good, the altcoins went good, and a lot of people take profits. It's a profit-taking time, and it has nothing to do with the overall situation. Market dominance is around about 53%. Bear in mind, there are about 30,000 coins around, probably 30 are relevant. The second biggest one is, as you know, Ethereum. But there's one which came in place in order to stay. That's the Bitcoin with 53. That's the future. Okay, open interest is going up. And very interesting is to see what the CMA is doing here, Chicago Mercantile Exchange. They took over place 1. Up until now it was Binance, which has to do obviously with the legal settlement as well. Why is this important? I was talking early on about liquidity, moving into the market, money supply, things like this. And the CME is the platform for institutional investment in the Bitcoin. And this takes place in the moment. Very bullish. On the liquidation front, nothing happens much. And quickly check the active wallets. We have a strong uptrend. We are close to 51 million wallets. Also very bullish. Another thing is balance on exchanges. It looks like that we consolidate now, which is the orange line, on about 2.3 million coins on the exchanges. By far not enough when the next bull run comes, which will drive the price because there are not Bitcoins available, bear in mind. Theoretically 19.5 million, 20% lost, which is 15 million, but just a little bit more than 2 million available. So there's not enough to buy. Maybe you experience now the last time in the next 4, 6, 8, 12, 16 weeks that you can buy Bitcoin. Pretty soon it can be very expensive to buy Bitcoin. Hash rate is another thing which has to do with this. And we have to talk about this today because when you see the hash rate is parabolic, going crazy. And I don't believe that this is just related to the mining companies as far as we know. I think a lot of states around the world realized that they can make money by Bitcoin mining, especially when they have access of renewable energy like sun or wind, especially sun, or even nuclear power stations. Because the thing is, when you look at this hash rate, which is 4 years history, it looks like that also China is playing a huge role here. And they officially said, well, we don't allow this and so. But what is China doing? China was the biggest net buyer in 23 in gold, which is a store of value. And we are pretty sure that they do the same thing in mining. So a lot of countries in the world started with mining if the energy is very cheap, and because a lot of countries need money, obviously, and Bitcoin is a great way in mining doing it. And this has been reflected also in production costs. We are now on more than $19,000 for one Bitcoin. Why is this? Because as the hash rate goes up, I need more energy, so my production costs goes up. The Google trends, well, we are sitting on about 75%, a very high level. We were even higher, but anyway, so the interest in Bitcoin, the information interest in Bitcoin is very strong on ones, El Salvador, Nigeria, but when, and this is new, on Free Brasilia, 4 Netherlands and 5 Switzerland. And I'm sure pretty soon Argentina will come in, because we just had elections, and maybe you realized it. The new president of Argentina, he is totally pro-Bitcoin, and he wants to stop the Federal Reserve Bank and blah, blah, blah. So this is also a very bullish thing. Another thing is the volume, the trading volume. Well, we are not fish and not meat. We are just on this borderline between red and orange. Not enough to see a huge bull run. We need more volume. And here we come to our trend following indicators, momentum indicators. And this is very clear, this picture. The middle one is important, the MACD. We had this bullish crossover to the upside. This is the start of a bull run. This is on a monthly base. It happened in the last 3 years. Well, the third time. It happened here when the bull run started. It happened here when consolidation to the downside started. And now it happened here about 3 months ago with the start of a new bull run. This is the strongest indicator about the future, especially when you look at the RSI. We are sitting on 56%, meaning we are not overbought, we are not oversold, we are in a very healthy situation when it comes to buyers and sellers. Now we come to our forecast models. 2 of them we have, and it looks like that the second model is more taking place. Just to remember, the first one is a little bit more conservative, ending with 41,000, with a slow increase to the end. Second one says now it's going to happen more aggressive, either on the down or upside. And it looks like now that this is going to happen. And this one ends with about 44,000 with the halving. Wyckoff. Well, phase A, B, C, D is finished. We are now in phase E, meaning the accumulation period is finished. The next bull run starts. And this model says that we could move to about $62,000. If you're interested in this model, how it works, accumulation and distribution cycles, this model is more than 100 years old, has nothing to do with Bitcoin. It's related to all kinds of assets. Go on our website, amin-finance.de, and you can check it out. Fibonacci. Well, looking really bullish. We are up in 100% zone. We went straight through. Moving average 50 to 200 days, another very strong indicator, because the crossovers to the upside and downside doesn't happen every day. And as you can see here in history, and we had this upside crossover, looks really, really nice. We come to the ribbons. This is for short-term trading. For long-term investors, it's not important, but bear in mind, the 37 could be pretty soon history. Still, the indicator says, well, it could be that a little bit of downside potential is there, but not necessarily. The last thing is our long-term indicator. This is like everything started. And you see the cycles, they all look more or less alike, and we are in the end of a fourth cycle. The fifth cycle will start pretty soon now with the halving. So now we come to the last issue, but it's a very important issue. If you don't want to buy Bitcoin and you want to make even more money, a possibility is to buy shares from mines. And this is why we developed a miner index. And this is quite historical. Why do I talk about this? For a long time, as you can see, the blue line and the red line were more or less sitting on each other. And now, since about 8 weeks, the Bitcoin developed better than the share price. Why is this? Because these shares from the major mines are shorted like crazy from huge companies. They play with the fear. And in average, the short ratio is about 25 to 30%. So more or less every third share is being sold on the short side. So a huge short squeeze can take place when they have to buy back all, because obviously they have to. And when you see the gap here, this is really a great possibility to be on the profitable side, especially when you look down here on the graph. You see on a historical base, the mines performed 3 times better in average than the Bitcoin itself. So this is probably the last chance to invest in the mines on a very low level and then taking profit from the next bull run. Well, We don't give you any financial advice. You guys have to make your own decision. We try to help you by giving you the best information available also for us. But again, you have to make your own decision. So we wish you a great week. Hopefully you make the right decisions. And we are back on Tuesday next week. It would be great if you come back and watch the video. Thank you and bye-bye.